We are talking tech stocks today with Kim Bolton of Black Swan Dexteritas. The number to call 1-855-326-6266 or email Kim with your questions on technology stocks. Market call at bnnbloomberg.ca. There are the coordinates. Kim, thank you very much indeed for joining us.
My pleasure, Andrew Bell.
Kim, we've got the usual to and fro in the market, rising interest rates, concerns about government debt. You think one good approach here is to just stick with investing with companies that offer a play on long-term technology growth trends?
Yeah, it's quite a wrestling match, between the stock market and interest rates. And it seems everyone is expecting interest rates to go up and inflation go higher. And, certainly that's had a pullback in the tech stocks. But it's also started to impact some of the current darlings in the reopening stocks. But for us, we're sticking to the knitting. Our strategy of investing in the leaders in those long, lucrative technology runways. And however, I must say, at this stage, those runways are a lot longer than I've seen in quite a long time. I would say at least half of our stocks that we have on our radar and that we own have anywhere from 20 to 30 to 35% upside from current prices. So you've had quite a pullback, but that's given some opportunity for us.
Now, are there tech stocks that are bargains right now, Kim?
Absolutely, and Andrew, you can see it even today. The software side has certainly taken off. But you've had a pullback in the IGV, which is sort of the barometer of for the software as a service side, and you've had a pullback there of 25, 30, almost 40% in some of these stocks. So eventually, people were going to come back and participate. And then, the IGV is up 2.5% today. And a lot of those software as a service stocks have really done quite well. At the same time, thankfully, you haven't had that much of a pullback in the semiconductor or even in the cloud providers. But they've just been sort of treading water, and you can see it perhaps when we go into the second quarter here, that you'll get some technology leadership again coming from the software and the semis and also from the cloud providers.
Okay, well, we're going to get into specifics with Kim Bolton of Black Swan Dexteritas. He's here to take your questions on tech stocks. 1-855-326-6266. We have an email here from Alan. Alan wants to know about Unity Software. Kim, remind us what Unity Software is all about.
Unity Software trades off the New York Stock Exchange, currently trading just over 101. Their competitive advantage, Andy, comes from their platform's toolkit, which allows creators with little or no technical knowledge to program games and simulations. Unity was one of the first to actually very much embrace the mobile side of it. It's been around since 2004. They've actually acquired quite a few companies, and even during 2020 of the pandemic, they picked up 3 companies actually just last year, particularly over into the artificial intelligence and deep learning side. So we don't own it. We follow it. We only hold about 25 to 30 stocks. We have 30 stocks right now. But it's got some upside. It's currently 101, price target of 140, 12 months down the road.
Okay, I think we were having a bit of trouble with the chart there, but that's interesting. So even people with no real software training could start creating their own games, for example?
Exactly, exactly. You know, not only, but you know, their meat and potatoes is where they actually partner with some of the big companies out there. You know, they recently partnered with Apple to run on the new M1 chip. So yes, it's for individuals, but it's also for the larger companies out there.
Okay, so one of interest, I think, Kim, but not in the portfolio right now.
Well, we don't want to diversify too much, but you know, it is. I do like the company. Yeah.
Okay. Bill in Ottawa, Ontario, has sent us an email. Wants to know about Schrodinger, SDGR on the NASDAQ. I assume this has nothing to do with cats in boxes, Kim. What does Schrodinger do?
So Schrodinger has been around quite a while. And when you, Andrew, when you talk about the story, you would think that it would do extremely well. However, they did have a hiccup back in March, beginning of March, where they actually missed on both the top and the bottom line. But basically, what Schrodinger does is that they're involved in drug discovery, predictive modeling. So, you know, with the whole coronavirus and the various offshoots of that, you can imagine that it's actually quite popular. You know, they're the top 20 pharmaceutical companies use Schrodinger's software solution. They have contracts of in 2020 they had 16 contracts of over $1 million, which was up from 10 in 2019. You know, they service all the big groups. They have partnerships with Bristol Myers Squibb and Sanofi and Takeda. Kathy Wood's ETF. ARC Genomic actually took a large position, $180 million position in Schrodinger, but it did have a pretty significant pullback in March. And so it's currently trading about $76, symbol is SDGR in the NASDAQ, and we have a price target of $92.75.
Okay, so is it a holding right now?
No, it isn't. But you know, okay. we follow it. You know, all of our stocks that we currently hold. You know, we have entry points, and then we have price targets, and then we have sort of the farm league, of which Schrodinger is in sort of that farm league. If we get one of our stocks that reach up to price target, then perhaps we'll buy into Schrodinger.
No problem. We're having a bit of trouble with that chart as well, but the stock trading at around $75 today, and nothing to do with quantum theory, I'm sorry to hear. Mary in Burlington, Ontario. Go ahead, Mary, please.
Hi, Andy. Hi, Kim. Thanks so much for taking my call. Kim, I'm wondering about Palantir. It's the only stock I've ever looked at thinking about buying where it had just as many strong buys as it had strong sells, you know. So people seem to either love it or they don't like it at all. So I'm just wondering what you think of it, and if you would buy it, where would you buy it, and then where would you think about selling it? Thanks very much. I'll hang up and listen. Have a great day. Bye now.
Thanks.
Thank you, Mary. Yes, we own this one. Currently, the symbol on it is PLTR, currently trading about, and it trades off of the NYSE, currently trading at 2367. So Palantir, and there are really sort of two that really describe leadership within the artificial intelligence side of things. and that's C3AI and also Palantir. Palantir, they have two sort of modules that they actually run on. And I'm just pulling up the data on Palantir. Just a second. There we are. So Palantir has two models. One is for the government models for artificial intelligence, and they do quite a bit both for the US but also for a lot of European governments. But then they also have this commercial model. And they really, one of our analysts, Yuri, is stationed down in Silicon Valley, and I always spend time with Yuri on a Friday afternoon, and really what Yuri does for us is he talks about where people are moving. So sort of in Silicon Valley, smart people attract other smart people, and really when it comes to artificial intelligence, Palantir seems to be the leader, and they attract sort of the smartest people involved in artificial intelligence, machine learning, and so on. So, our price target on Palantir is $33, and we have about a 2.5% position in Palantir. Over to you, Andy.
So Palantir getting the nod there. Kim Bolton is taking your questions today on Tech Stocks, 1-855-326-6266. Mark is calling from Ottawa. Go ahead, Mark, please.
Thanks, Andy. Kim, I'd like your advice on a SaaS stock. Let me see. ServiceNow, I'm just looking at it. It's dropped about 20% in the last recent while since the middle of February's highs. As I look at the 5-year chart, this is a great company. However, their valuation is so high, it bothers me a bit. Is this a good time to jump in on this, or with the economy rebounding in the States, or should I just maybe pass? Thank you.
Thank you.
Great question. Thank you very much. ServiceNow, symbol is NOW. We own it. And it's currently trading at just over almost 502. And you're right, it's pulled back from just about 600 back at the beginning of February down to the low 500s. So ServiceNow develops a cloud computing platform to help companies manage the digital workflows of enterprise operations. So you can see that it was in the right place at the right time during all of 2020. But you're right, it did get a little expensive. However, they reported back in January, and they beat on the top line, they beat on the bottom line, they increased their guide going forward. And, although they IPO'd back in 2012, they've been around since 2003. So this is just a great example of a software as a service company that very much helps out sort of the commercial and enterprise side of it with their digital workflows that are going on. And it's a great example of good execution by the management team. However, it does get a little bit pricey. We had a price target, and we have a price target of 593. So we had a full position all the way up to about a 4.5% position, and then we pulled back about just about a half of that. And then last week we actually added to it down just around 475. So currently 502. I would I would say yes. Buy it now, and we have a price target of $5.93. Over to you, Andy.
Okay, we got another Mark on the line. Mark in Toronto. Go ahead, Mark, please.
Hey, Kim. I was just hoping to get your thoughts on C3 AI, whether you would, buy it now, hold it, or perhaps sell it. And I was just curious if you could speak a little more about the company and what makes it unique in the AI space. I know they've got a lot of cash on their balance sheet, but just any other things that would make the company attractive or unattractive. And thanks a lot for taking my call.
Thank you.
Thank you, Mark. So this was a difficult one. It's actually one of the favorite ones coming from Gartner Research, that massive technology research firm. They IPO'd back in it was around the second week of December. And they came out just right around $100, and it continued to spike all the way up to about 170. We waited for it to come down. We bought it back at the beginning of the new year, and we had a price target of, again, 170. And thankfully it got up there, because ever since the middle of February, it's just sort of slid, and really a lot of that had to do with the competition. Number one, the competition out there in the artificial intelligence space. But then there was a lockup period, and some of the original investors took advantage of it, and it's really sort of sold down so that it's actually come down under its IPO pricing, and it's currently trading at $66. We haven't touched it since it was up at 170. So it's a well-run company, and it's sort of a bit of a toss-up between C3 AI and Palantir. We've stuck with Palantir, but ever since that lockup came up, and the price action of C3 AI has not been good. We've sort of stood back and just waited for it to sort of recover. So it's more about the price action there, Mark. I hope that helps.
Oh, okay. So nothing against the company. You don't like the price action. Okay.
Yeah.
Francois in Montreal. Go ahead, please.
Handheld system, do you like is this a good entry point, or would you wait for more of a pullback? I was thinking under 50 or something. Thank you.
Thank you.
Thanks, Francois. This is Eng. I believe he said Enghouse, didn't he?
Enghouse, yep, he did.
Yeah,
Yep.
Yep. Okay, so Enghouse, we don't own it. It's currently trading right around $60. And so Enghouse is a Canadian company. It's involved in enterprise-level software solutions. It had a bit of a problem when they reported. And so that's why it's sort of pulled back. We still have a price target of $75, but again, it's been the price action that has been difficult. And they focused a lot within their recent acquisition, or last. It was about 18 months ago where they acquired a software-based visual communication company called Video. And it's what Video does. It's a commercial video conferencing software. So it was a great product and service to have during the whole remote work from home side. And it sits on quite a bit of cash. But currently trading about $60. And we have a price target of $75.40 on Enghouse. Thanks, Francois.
Okay, thanks very much for that. Kim Bolton's Past Picks coming up next.
Oh.
Kim was on our show March 31st of last year. Micron Technology was your first idea. Just remind us what they do, Kim, and tell us, would you buy it again?
Thanks, Andrew. Micron, yes, we own it. And Micron Technology is in the semiconductor field. And so in the semiconductor field, there are sort of three different kinds of players. There are the foundry guys. Probably the one best known is Taiwan Semiconductor. And then there's the designers. Examples of that would be like a NVIDIA or an AMD. And then finally, there's the integrated manufacturers that have both foundries, in-house foundries, to produce the chips on the wafers, but they also have their own design studios. And you know, in the semiconductor side, because there's such a huge demand coming from the automotive side, from the cryptocurrency side, from the gaming side, and then, you know, from all the smartphones and so on, it is there's an imbalance between supply and demand, so there's more demand than supply out there. So Micron has been in the right place at the right time. One of the things that they are very well known for is in the sort of the memory chip side of it, the NAND, the DRAM, and also the 3D XPoint. And so about 2/3 of the Micron's business actually comes from the DRAM side, which is a very popular chip out there. They reported back in January. They did extremely well. They beat on the top line and the bottom line, but more importantly, they guided higher. Currently, let's see, what's it trading at there, Andy? There it is. It's trading at off of the NASDAQ at just over $88. We have a price target on this of $108.90.
109. Whoa, so you see plenty of upside. Your next idea, yep. Shopify. Let's see how that one is done. And would you buy it again, Kim?
We own it, and we've been adding to it. And our average price is right around here at about $1,100. But we have a 12-month price target on Shopify of $1,453. So, you know, this is one of the Canadian darling technology stocks, and you know they've got a very long runway, servicing into the small and medium sized businesses. They're in 175 countries around the world. They offer that e-commerce front end, but they also have that back end infrastructure. And it's just become a terrific company to invest in and buy on the dips. It doesn't seem to want to go under 1,000 US. So whenever you get a chance to actually buy it down, you know, under 1,100, and right now it's at 1,108. They just blew the doors off. When they reported back in, what was it, the 17th of February. And so we love this Shopify. Over to you, Andy.
Your next idea was SEA or C Limited. I'm not sure which. Remind us what they're all about.
Okay. So C Limited is out of Singapore. And I always talk about, you know, in Canada, you know, the e-commerce platform for both the front and back end for small and medium-sized businesses is Shopify. In Southeast Asia, it's C Limited. In Latin America, it's Mercado Libre. So we always talk about it, but C Limited is not just involved into e-commerce. They have a very, very significant online gaming company called Garena. C Limited, I forget how much Tencent owns now. I think it's down to about 28%. But when they started out owning about 40% of Tencent started out owning about 40% of C Limited. So they actually got a lot of the popular online games that Tencent had over in Southeast Asia, the League of Nations, the Call of Duty, the FIFA Online, and so they actually have it on their platform at Garena. But then the third sort of business unit that C Limited has is AirPay, which is the digital payment side. So they've got it all sort of covered, very much like Shopify, very much like Mercado Libre down in Latin America. We have a price target of $300. You can see it on the charts that it's actually had a pretty significant pullback. So it's not a bad time to actually add. We don't own it yet. We bought it about, it was around $41 and something. $44 back the beginning of last year. We sold it up at 140. It continued to go up to 170, but it's had a pullback. But we have a price target, 12-month price target of $300 on C Limited. Thanks, Andy.
Okay, $300. Okay, Kim Bolton is taking your questions on tech stocks, technology plays, 1-855-326-6266. Mike in Windsor, Ontario. Go ahead, please.
Tell me what you think about Apple going forward. Thanks.
Thanks a million.
Thank you very much for your call, Apple. Sometimes we own it and sometimes we don't. And this time around, we are not involved. However, we're involved in a lot of the supply chain when it comes to the smartphone side. But we owned it going back last fall. We sort of rode it all the way from, about $115 all the way up to, $140. It sort of peaked there back at the beginning of January, about $145. There's been, some concerns, and it's so widely followed, but some concerns on that they've had to cut back a little bit on their production because of a lack of demand out there. So currently trading at a 123 and a half. It seemed to find a base there over the last little while, down at around 120. But it's interesting. Over the last 12 months, Apple's up 65%, but it's down about 5% over the last 6 months, and it's down about 7% in the last month. So it's just the price action, and I think what it was all about is that Apple was really taken as one of these companies that you could take some profits from and put it into the reopening trades of the casinos and the gaming and so on.
And that kind of took money out. Okay. Yeah. We have Dave in Toronto. Fire ahead, Dave.
Thank you for taking my call. I wanted to talk about Twilio. I think Twilio has a moat around it. It's like kind of neat what they do. And not a lot of people do what they do. So I was just wondering. I think it was Kim's top pick in the past, and I was just wondering. It hit its 200-day moving average, and it bounced right off of it. So I'm thinking maybe it's a good opportunity to buy here. So wanted to see
Thank
if
you.
still hold
Thanks.
it.
Dave, sorry, Dave. We were having a bit of trouble with the audio. Twilio, Kim, please.
Yeah. So Twilio is another example of the software as a service that had a bit of a pullback. So Twilio offers cloud communications platforms to its clients. The clients' developers use APIs and other software tools designed for specific use cases in developing in-app communication mechanisms. So Twilio's platform really applies to the APIs, and Twilio has been one of the biggest benefactors of additional time that is spent remotely. Twilio's enterprise clients are benefiting dramatically from lower costs and times required to develop customer-facing messaging platforms. So it's a platform as a service, and is fast becoming sort of the Amazon of the communications world out there, and it's very much the operating system for the digital world. So we have a price target of $412.83, and yes, we own it.
Okay, we're going to take a break. Kim Bolton is taking your questions on tech stocks. 1-855-326-6266. Patrick in Toronto. Go ahead, please.
I was wondering if I could get Kim's thoughts on Asana. Thank you.
You got it. Thanks.
Yeah. Thank you, Patrick. Asana. We own it. Love this company. Not only as an investment, we actually use it here at Black Swan Dexteritas. So they're a leader in the sort of collaboration work management space. They compete with the likes of Slack, that was bought by Salesforce, Atlassian, that Australian company, Smartsheet. So we use it, and it definitely enhances productivity and really increases accountability at every level of the organization, for individuals, for team leaders, for management, and so on. The company's co-founders, you'll all know, Dustin Moskovitz and Justin Rosenstein. They were the partners of Mark Zuckerberg. This is one of those companies that, as interest rates were creeping up, that there were concerns about its valuation and its PE multiple. And so increasing interest rates really sort of discounted that PE ratio. And so, we started out at the beginning of the year right around this level. It's currently trading at about $28.50 US. And it spiked all the way up to, sort of the third week of February, up to the low 40s, and then it's come back to this 28.5 level. We actually have a 12-month price target of $37.25. And so we definitely like this company.
Okay, let's head to Blair in Mississauga. Go ahead, Blair.
Hi, Mark. Kim, I'd like your opinion, please, on photon control. Back on March 18th, they came out with a fourth quarter and annual 2020 financial results with record revenue, and I was I'd never seen that good of a report, and yet I thought stock might pop that day, but the same day the NASDAQ pulled back and it dropped 10%. I just wonder what your thought on this company is in the future. Thank you very much.
Thanks.
Thanks very much for your call. I'm just pulling up the chart here. Okay, so photon control. Symbol is PHO, currently trading at about $2.45. We actually have a 12-month price target of $3.25. Now, saying all that, we don't own it because we're sort of full in our portfolio. But photon control, they're a precision management solutions company. And they design, they manufacture and distribute optical sensors and instruments, primarily used in the wafer fabrication equipment side of the semiconductor industry. So that's why they're reporting, as you were saying, they're doing quite well, but again, they've sort of they've had a bit of a pullback since, the middle of February, from that sort of $3 level down to the sort of $2.45 level. But we have a 12-month price target of $3.25 on photon control. Thank you.
Okay. We are going to squeeze in at least one more caller. Brenda in Vancouver. Go ahead, please.
Yes, your thoughts on Constellation Software.
Thank you.
So the symbol is CSU. It's a fabulously run company, and basically, the Constellation Software, Canadian company, fantastically run. Its business strategy is to go out and acquire software startups, and they've done almost 300 since they started about a dozen years ago. It has a 10-year ROIC of 32%. And they have 6 sort of business units. And I could sort of drill down within each of them, and perhaps you could give a call and I could get more into it. But Constellation Software is currently trading at 1,771. We actually have a 12-month price target on this of $1,800. So there's not much of a runway left in. They're just running on all cylinders. So, but if you get a chance at a pullback, and I would say a pullback would be sort of in anywhere between sort of 1,550 and 1,600. It's a great opportunity. We had a pullback in Constellation going back at the latter part of January this year. So just be patient. Thanks, Andy.
Okay, we are going to take a break, and we're going to get the top picks from Kim Bolton next on Market Call. Kim's first idea is BYD Company. Remind us what they do, Kim.
All right, thanks, Andrew. BYD. So they're a Chinese technology conglomerate. But what they're well known for is one of the largest players in China on the electric vehicle side.
Okay.
So and you can only buy this actually on the Pink Sheets American Depository receipts. And we've been nibbling away at BYD, currently trading at just over $43. We have a 12-month price target on BYD of $68. We've done a lot of research into this whole electric vehicle ecosystem. So normally we would sort of buy the supply chain. But the more we looked at BYD and the fact that it's one of the world's largest producers of lithium batteries for electric vehicles by production capacity, they have both sides of it. They have the electric vehicles and they also have the batteries. And the last thing I'll say about it is that Warren Buffett owns 8.25% of BYD.
Okay. Your next idea is Infineon.
Infineon. So this is a semiconductor company that is one of those integrated device manufacturers. So they do their own designing and they have their own foundries. They're now they're the number one auto chip supplier, and they're the 8th largest semiconductor company in the world. So they're a leading supplier of chips and power management related to electric vehicles and automated driving. It's a German German-Dutch company. Again, this is available as on the pink sheets, American depository receipts. It is currently trading at $42.50. You could buy it here. It's up about 2.5%. We actually have a $50 price target. So I would recommend do it in a third. Buy a little bit here, buy a third here, add some down at 38, and then if you're lucky, down at 35. Thanks, Andy.
Okay, your next idea is Sony. Sony.
Yeah. Well, everyone knows Sony, but again, this is available. It's actually an ADR, American Depository Receipt, offered off of the New York Stock Exchange. So it's a Japanese conglomerate which operates in a number of business units: electronics, semiconductors, music, film, and so on. Why we like it is that they're in the right place and they almost have a monopoly on this. They have a 44% market share in image sensor market. You know these are the modules that are put into the sort of the flagship mobile phones of Apple and Samsung. But then on top of it, they have a 64% market share in gaming consoles. So just to sort of put that in perspective, in last year, Microsoft shipped 2.8 million units of their gaming consoles, but Sony shipped 4.2 million. So we have a 12-month price target of $147. It's currently here trading at about 105. So I'd buy, half a position here. And if you're lucky, if you can buy it down closer to 100 for the other half. Thanks, Andy.
Okay. Let's leave it there. Kim, it's always great talking to you, and thank you very much indeed.
Thanks a lot, Andrew.
Kim Bolton of Black Swan Dexteritas joining us there on Market Call. Let's check in on the markets before we go. Of course, that backdrop of rising interest rates has been deterring the equity bulls, but US markets pointing to the upside today, actually not doing that badly. Interestingly, with the prospect of America issuing vast numbers of new bonds, as we get ready to hear more about President Biden's stimulus plan. Now, I'm just looking year to date. It looks like the US market, the broad US market, up around 6%. The TSX, let's have a look at that. Still can't get up to those record levels of 19,000 again, but trading modestly higher today. I have the TSX composite up something like 7.5% so far in 2020. Let's check in on that US bond yield, that US 10-year bond yield. We have seen it above 1.7% this week. And of course, that well, it does reduce marginally the attractiveness of stocks. There's more of an opportunity cost. Let's have a look at oil, because we did see oil climbing above 61 bucks earlier today. The OPEC ministers meet this week. They are expected to indicate that the current policy of production restraint remains. So oil now below that $61 level. Did get up there though earlier. Let's have a quick look. Let's have a quick look at SJR.B, because yesterday Ottawa indicating that it does have concerns over the plan by Rogers to buy Shaw Communications. Shaw is SJR.B, and of course Shaw has been trading well shy of the $40 plus level at which Rogers valued its offer for the company. Both, of course, compete with BCE, the parent, the owner of BNN Bloomberg. And maybe we could have a quick look at copper. Do we have time for copper? I'm not sure if we do. Okay, we got to wrap it up. We can't look at everything. Thanks very much indeed for watching Market Call. We'll be back tomorrow.